Hello, this is Dale. Let's continue our education on my three principal method of trading. This is a laser focused system to unlock profits in any markets: stocks, options, ETFs, Forex. On part 9, what I'm going to be showing you is actually two Forex trades. One where we bought the pairing of the US dollar Japanese yen, and one where we sold. Once again, my name is Dale Brethauer. I've been a trader for 35 plus years. Hedge fund manager. I've been a guest speaker at a number of platforms. I've written 3 financial books. Trading options is the way I've made my money, earned my living. Currently, I have a passion for teaching others how to be a success in this very difficult arena. I'm the founder of www.optionsinfinity.com, which I believe is the very best stock option education website available today. We're going to start with our entry to exit walkthrough, remembering that when the price moves to either the plus or minus 1 or 2 of the standard deviation on the regression channel, that is a signal to either get in or look to get in when you get a measured move that confirms that. That's our first entry. We have secondary entries, but usually with trading Forex, I'm looking for it to be overbought or oversold. Then our exits are either we get a measured move opposite the trade or we get out at the Fibonacci's, which we can preset once we have a measured move. These two trades occurred in May of last year, and then one in January 24th of 2020, this year. This is a chart of the US dollar Japanese yen pairing. And you can see that it was below the regression line. It had been trading down, and it came down to this point here, at which point it made a measured move right here when it had a higher low and a higher high. Once you have that, you can put in the Fibonacci's by starting here, dragging to the high, then dragging to the higher low, and that automatically will put in the 127 to the 161. Again, if it comes up to the 127 and kind of consolidates, maybe even pull back, you might want to wait a little bit to see if it can go to the 161. A lot of times it will. And then when you have a second measured move, you can always put in another Fibonacci. And when they start clustering together, you know you've got an area that you're probably going to get to. So this was kind of the area I was looking to. It did pull back, and this ultimately was where we could have gotten out right there. That would have been a little bit aggressive, and I'm going to show you that. I tend to be a little bit more conservative and was focusing right around this area here. The US dollar Japanese yen pairing is the only one that is quoted in 2 decimal places. In other words, 109.77, that's what it was when we bought the pairing. 1 pip is 7 right here. So there were 7 pips. Pip is the price interest point. It's the smallest change in value for any given Forex quote. So for the US dollar Japanese yen pairing, that is the second decimal point. The quote tells us that 1 US dollar is equivalent to 109.7 Japanese yen. To calculate the profit, what you want to do is you want to take the number of pips, either profited or lost, times the number of lots, times the dollar value per pip for a mini lot. And for Thinkorswim, the mini lot is set at 10,000 units. So if you had 85 pips, you have 85 times one lot times 90 cents. And 90 cents is the dollar value per pip for this pairing. So we had a profit of 85 pips, or $76.50. The leverage on Forex can be as big as 50 to 1. So and the margin is only $2,000 per mini lot. And the mini lot, again, is 10,000 units. You got $200 margin. We made $76.50 in 2 days. So that was a profit of 38.2% of margin. Here it is right here on our chart that we show our current trades. This was our Forex trade we made. And actually we got in and you just buy the Forex pairing, and we got in at 109.77, got out at 110.62 for 85 pips. Now, this strategy works going up and going down. Here's the same US dollar Japanese yen pairing, and you can see we made a measured move right here. This is the time to get in. And once you have a measured move, you can put on the Fibonacci's. So we were looking at 127, could have gotten out here. The 161 was down here. Very conservative trade, more aggressive trade. On this trade, we made 89 pips. So on one mini lot, we take 89 times 1 times 90 cents, again, is the dollar value per pip for the pairing. So we made $80.10 on one lot. That was on $200 margin. That's a 40% return on margin, and this was a very quick trade. I wanted to show you Forex because we've been talking about this strategy works on stocks, options, ETFs, Forex, futures, and I just wanted to show you a couple trades we recently made on Forex that were very profitable. It follows the same rules. You look for an overbought, oversold condition. You look for a measured move. Once you have a measured move, you can put in the Fibonacci's to see when you might want to get out with a profit. And if it makes a measured move against you, exit. The rules are just simple. They apply to all markets. If you like what you've heard so far, I would behoove you all to go to our website, www.optionsinfinity.com. We've been in business for 10 years. And right away, you're going to get the 3 principle method blueprint for free just by clicking here. And if you decide that you want to go further and join us, it's $99 a month. It's recurring. You can cancel at any time. You're like watching a professional trade, because I'm going to send out alerts when I see a monthly, a weekly, or a leap vertical spread, a stock trade, or a Forex trade. All trades are then posted. Over 10 years, we've had 75% winners. In addition to watching me and the alerts, every week we have a weekly webinar. This is taught by me. I usually go over a lesson, then we look at all our trades, and we got plenty of time for the members to ask questions and interact with one another. Then on Thursday and Sunday, I have member reviews. These are video blogs, usually last between 5 to 10 minutes, kind of review everything that we have and what I see going forward. This was voted one of the top 10 blogs worldwide by FeedSpot. I hope you consider us and join us and earn while you learn. Bye-bye now.